Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and here we are on 11/11/11, November 11th, 2011, and the time's going to shortly be 3:11. That's a lot of 11s, I'll tell you. Stock market, pretty strong performance for the day, and so was gold. You know, the gold market proved to be yesterday what I'll call a bear trap. I'm the first to tell you that the market came out of what I call the short-term uptrend yesterday, but the stochastic reading, which did last night, intraday, come out of being embedded, got that $30 rally in gold and went right back to embedding, which after the fact means until you take out yesterday's lows, you have to assume that the market just made a correction and no more than that. Here is the gold market. And the gold is up today as we're seeing confidence build where? In the world markets, because finally Europe is doing something. The Italian government, they're voting, and it looks like they're going for a heavier austerity measure. That vote this morning means that Berlusconi is on his way out, and with any luck, there'll be a change of government. That will take place before the markets open on Monday. And I don't want you to hear me say that it's an anti-Berlusconi. Change is what's necessary. I couldn't begin to tell you if what the man did is right or wrong. I don't pay attention to Italian politics that way. But the market wanted a change in Greece. It got it this morning. Market wanted to see the Italians do something to recognize that they have to even cut deeper. They did, and interest rates there fell nicely under that magic 7% mark. In the past day or two, we've seen almost a percentage point decline on interest rates. It's very, very important for everybody to understand the importance of that. And gold is not being lost with that. The gold market has been working its way higher. I'm the first to tell you it had resistance at 1804. That was the old Bollinger top. You'll see it in a minute. The market fell back down. What I don't like, and the pattern that hurt, was on yesterday's break. You took out a previous break low. So right now what you have is a high, a lower low, and until this high gets over 1804.40, you've just got a confusing chart pattern in the swing line. Where the market cleaned itself up is it didn't get under the 18-day average, which is now at 1727 and going to rise again over the weekend because you're going to drop one of these lower days back here in that 18-day average of closes, and it might get very close to the last break low of 1736.60. It's beginning to look more and more like that number. Yesterday's break low is going to be a number of major importance. We also had a crossover just take place, and do you recall, if you don't, go with my videos yesterday and the day before. I said when you get a crossover where a shorter-term average crosses a longer-term one, it's often accompanied by a market thrust. I did not expect yesterday to break the way that it did. Market doesn't always give you what you want. What could I say? I thought the market would more or less do what it did today, which is a day laggard. And the real capture for people in the market, it's not here. This is the Bollinger tops, as you can see, and the market has been paying good attention to it. In fact, they're still widening out, which is pretty amazing. But this is the key. Until the red line gets under 80, the momentum, the internal momentum of the market is upward. And yes, you can fall down to that number and turn away. And look at today. We're finishing up at 87 and 83. I'm telling you, the red line last night got under 80. But a $30 rally at the end of the day carried it right back up. And I look at the market on stochastics on a closing basis, not on the intraday basis. So the trend is up. 1736.60 to me is very important, and 1838 is the upside target that I'm seeing in the market. In the silver market, it's a very different picture. Number one, silver doesn't have an embedded stochastic. It's plain overbought. What I like about silver is that the stochastic is going sideways and it's narrowed in. This is a pressure cooker. This is like you have something on the stove, you got the water boiling, you snap that lid shut, and the longer this market winds and the tighter that band goes, ultimately you resolve a trend. We'll wait and see what that is. Right now, there is nothing to resolve. The current pattern is a lower low at 33.13 than this low. You fell back to the 18-day average of closes where the market held. It hasn't begun a pattern of higher highs or a pattern of highs that are lower and lows that are lower yet. Don't have anything. You're stuck in the middle of no man's land. In the platinum market, unlike the gold, it has lost its embedded reading. So the only way it can get it back, which is very important if it's going to go up, it's got to immediately pop right now, next day, Monday, right back to the upside strong to get it back. Otherwise, I believe the market will languish sideways to lower until prices meet the 18-day average. Then it'll be like a reset and the game will start fresh. In the copper market, if you didn't know anything, let me just show. Here's the market breaking down. There's the break. What I'm looking at now, and this was through yesterday, is you've got a pattern where you're now making a high, a lower high. You know that low, you've made a lower and low. I will look for resistance against the 18-day average of close. The momentum is down. Today the market rallies. The 18-day average of closes is 347.30 roughly. We got to a high of 347.90 and we're around 347.05. We're at the resistance point in this market. So we have to wait and see what's going to show up next on that. Before I get too far and finish up the rest of these charts, our futures trading kit. I've got to tell you, in the next week, we've already begun what we call a soft release. We've created our phone application, and we created an application that works basically just like a web browser for you on your phone. I think it's as cool as developing an app that downloads for it. And it's what we call light. You're going to be able to use it to, and let's assume you just want to look at grains or metals or whatever. You can hit those. You can customize your quote pages on it. We have our news flowing through it, oral commentary, and if you're watching me here, you'll be able to watch me on our phone as well. So we'll even be able to send out a message that the phone updates or this update is ready, and it'll give you a message if you want to watch it right away. You say you want to trade with us, and you're out on the road, you're in a show, whatever, you want to check on the market. Well, you'll be able to do that, hit another button, and you're trading right on your phone and able to look at your statement or enter an order, whatever you'd want to do. So that's going to be a very neat program. Another thing, it's free to try this all out. So our futures trading kit, when you call in for it, we will be sending this out to everybody we have a name for so they're able to give it a try. How do you get this? And again, it's free. The whole kit with the charting software you see me using here and so on, you get it by calling 1-866-973-2077. If you want to go on our website and sign up for the kit, www.iraepstein.com. And when you look at these charts, right behind my phone product, we have developed another product for people that don't want to do a Java download. Now, I love these charts. It's my favorite thing to use. However, we're also creating the charts where you'll be able to work them just off a web browser, which means it will work with the Apple computers, the Mac computers, just about anything that you have, anywhere that you go. You don't have to have it downloaded on your computer or anything. There are no downloads. You open up the browser, and the browser will do multiple pages within one large frame. It's pretty neat. Pretty neat. It's taken us 2 years to develop it, and we'll be releasing it in the next week or so. All right. So let's go back to this and continue with the markets. Here's the natural gas. One of the things I've been trying to teach you is in a real bearish market, the market tries to hug the Bollinger Band bottom. Look what's going on. And I've been doing sort of nasty lecturing all week because we had a live chat room, and it was just 2 days ago. And people were asking me, do I think that we're going to get back up in the natural gas to 4? And I scolded them. I said, why are you looking for an up market? This is a bear market. Why aren't you asking how low the market will go? And that was my point to it. This has been a classic bear market. And I realized all the people that are telling you, oh, natural gas is the next big thing and prices are going to go up, they're not going up. Right now you're in a bear trend. When they go up, they go up. But until the bear trend ends, you're not there. And actually, this market's getting stronger to the bear side as it's breaking. You're locking in now your stochastic study. So I'm just playing a bear in this market, and I don't see where the market's going to turn. A little bit different is you go to the Brent crude. And the WTI crude, and that's what this product is. Look at how this market keeps gaining. Now, the 100 level is what many of the technicians have been talking about. I'm looking at it. Notice where the Bollinger Tops comes in at 100.05. So that's the resistance zone. But more important to me, look at the stochastic. Do you see how sideways it's been going? And embedded right about here. And since then, the prices have been taking off. It's one of the strongest signals I feel you can get on a chart, is that stochastic locking in. Now, here's another product that's interesting, coffee. And it's very much sideways market. I'm sure you're hearing about some of the stock plays that have been going on between some of the short sellers and some of the companies out there. Well, the coffee market's now stuck against the 18-day average of closes. The current pattern still has a pattern of lower highs but higher lows. That low is higher than that. We're narrowing in. Something big is going to happen here, and you've all of a sudden got this straight Bollinger Band, so it's something to put on your radar scope.